Welcome back. Hope you're having a good morning. Well, our research team is standing by as promised with CNBC-TV18's top stocks that you need to track for the day. Good morning, guys. Rima, you go first. You're tracking a couple of auto names.
Well, two of them, Ashok Leyland and the other one is Amara Raja. Let me start with Ashok Leyland, where the numbers are looking good, better than what the street was anticipating. The company has clocked in a top-line growth of 33%. Operating margins have improved by 210 basis points year-on-year. Margins at 10.9% is ahead of street expectations of 10.2%. And if you pull up the trend chart of Ashok Leyland's operating margins, you would see the margins have been improving for the third consecutive quarter. At the profit line, it's a profit number of 751 crore. It looks sharply lower compared to the 900 crore that we had in the comparable quarter of last year. But that's because Q4 FY22 had an exceptional item of 470 crore. Amara Raja's numbers look good on a year-on-year basis, though on a quarter-on-quarter basis, margins have declined for Amara Raja. Let me talk about the year-on-year numbers. Revenue growth at 11.4%, very strong margin expansion to 13.9%. Profits are up 41%. But as I said, margins are lower than what they were in Q3. In Q3, the margins were at 15.7%. So QOQ, there is some margin pressure, and that could weigh on the stock. The board has gone ahead and recommended a final dividend of 3 rupees 20 paise. The management in the release talks about seeing strong volume growth in both automotive and industrial applications. They have seen an increase in market share for both OEMs and the aftermarket segment in the automotive battery segment. We will be joined by the management of Ashok Leyland in just a short while from now. But let's move on and talk about NMDC. How did the numbers look?
Well, the numbers were better than what the street was expecting, actually. On the top line itself, that was a beat, and that further percolated down to the EBITDA as well as the profit number. The revenue number, well, that was better. Remember, we already have the provisional volumes numbers with us. So, in all probability, the realizations were better. EBITDA better as well as profit number. Now, sales volumes numbers, well, we were working with the number of around 12.4, 12.5 million tons precisely, right? Because you have the provisional number. But the average realization, well, that jumped up by more than 20% on a sequential basis. So the realization should come up for you. Compare Q4 with Q3, and that was good. And margins as well did improve on the back of better than expected realizations. The profit number looked much better, but that was an exceptional income of close to 1,200 crores. There was some amount that was kept back by a monitoring committee, which they got, and also some money that they've got because of the sale of the NINL asset. What supports the stocks? Well, it's good amount of dividend and cash in the books, more than 20% of the market cap. So expect it to open up mildly in the green. But the scenario has changed very much on pricing as well as demand. So we'll have to see what happens to the stock from there on. And midday, I'll be talking to the management, so we'll get you further details. But Vivek joins us to tell us about JSW Energy. Vivek?
Well, good morning. JSW Energy, best described as a mixed quarter. While revenue growth was quite steady on a year-on-year basis, margins were actually marred by higher fuel as well as finance costs on a year-on-year basis. Now, when you're talking about the revenues, higher by almost 9.5% on a year-on-year basis. However, the adjusted EBITDA, when you're talking about it, optically much lower, down almost 34%. And margins to EBITDA margins on a year-on-year basis have contracted quite significantly. Net profit, when you're talking optically, it's down almost 68.5%. However, Q4 FY22 had a one-off adjustment relating to a hydropower regulatory deal that the company had got into. Now, the company actually has gone ahead and given very ambitious targets as far as FY30 is concerned. And along with that, the company has also gone ahead and given Strategy 2.0. So when you're talking about FY30, the company is saying that 3.5 to 4 times increase in EBITDA is what they're going to see from the current normalized EBITDA levels. And when you're talking about profitability, 3.25 to 3.7 times increase is what they're anticipating by FY30. And when you're talking about the Strategy 2.0, generation capacity target for FY30 is almost at 20 gigawatts, energy storage 40 gigawatt hour, solar module manufacturing of close to 1 gigawatt, and green hydrogen of 3,800 tons per annum. So very strong targets given, and also slightly changing the business model itself.
Okay, Vivek, thanks very much. And we will be, by the way, joined by the management of JSW Energy. That conversation will happen at 9:30 a.m. this morning. Let's move on to the pharmaceutical space. Biocon and Sun Pharma, Taro numbers came through. Ekta is here with details on both. Ekta, morning.
Morning. Well, both of them, I expect both the stocks to be in the green, Biocon as well as Sun Pharma. For Biocon, the revenue was better than estimates. In fact, it was a top-down beat. This was despite the Viatris biosimilar integration which took place. So the numbers beat those estimates as well. Revenue up around 56.7% to 3,773 odd crores versus estimates of around 3,611 odd crores. EBITDA 997 odd crores, estimates for 860 crores. Margins 26.4% versus estimates of 24%. Profit of over 300 odd crores. Other income was higher. Biosimilar business, like I mentioned, was because of Viatris acquisition, up around 114% year on year. Research services did well. The call is at 9 a.m., so more details then. Sun Pharma, Taro, the stock ended up 3.4% in US trade. Best performance in 2 quarters. Q-on-Q recovery has been positive. So net sales $146.6 million, margin 6.3% versus 1% Q-on-Q. Profit $7 million versus $7.3 million. But the street will be watching the operating performance, and that's the reason you'll see the stock, at least Sun Pharma, higher.
Thank you very much for that, Ekta. Let's go across to Mangalam, and he's going to be tracking about Metro and Bikaji Foods.
Well, for Metro brands, the revenue growth was no problem. 35% jump is what we saw there for the company, but the EBITDA grew just about 10.6%. That led to a margin compression of nearly 600 basis points, and the net profit as a result of which was largely flat, a decline of about 1%. That, of course, was further, compressed by a depreciation element as well. So the depreciation of the company increased by 45% this time around because they added about 19 stores in the quarter. However, the company also said they incurred higher expenditure on advertising and marketing in the second half of this year, and they have some excess inventory because they're shifting their back-end systems, as a result of which the focus for FY24 will be liquidation of this excess inventory. So which means that we could see some margin pressure in the next couple of quarters as well, as a result of which see some red on Metro brands. Can't say the same for Bikaji. In fact, it could be one of the stocks of the day, and largely because of a sharp expansion that we've seen in their margins. The revenues grew 15.5%. My sense is volumes would have grown much higher because, of the reduction in raw material prices. The company would have passed on some price cuts to the consumers. EBITDA jumped by 52%. The management had guided for double-digit margins for the next few quarters. They've gone ahead and done low teens here, 13.4% versus 10.1%, as a result of which the net profit coming in at 38 crores versus 24 crores. That's a 40% jump. The gross margins of the company, of course, expanded by nearly 500 basis points. So see some green on Bikaji.
All right, thanks a lot for that, Mangalam. Well, let's hop across to Surabhi. Dixon Technologies, those numbers looked quite good.
Good morning, thanks for that. So Dixon Tech, like other EMS companies, have reported a good set of numbers. Now, it beat estimates on all fronts. The revenue was up 4% on a year-on-year basis, and the company has seen a 100 basis points margin expansion on both gross margin and EBITDA levels. The internals look strong as well. The mobile and the EMS segment, which is the biggest segment and has seen some weakness in the past few quarters, has seen a revenue growth of 9% and a margin expansion of 70 basis points. The company did indicate on the con call that they have received a large order from Jio, and the volumes from Nokia have increased, which has aided to this revenue growth. The next big segment, which is consumer electronics, there the company has seen a marginal revenue decline of 3%, but nevertheless the margins have expanded by 100 basis points. They said that the revenue was affected by high open sell prices in the international market and weak consumer demand. Lightning segment saw some weakness, but that has been consistent with the other peers as well. There the revenue was down 11%. Home appliances and security systems both have seen a revenue growth and margin expansion on a year-on-year basis. Now the stock has rallied close to 8% in the last 5 trading sessions. So let's see which way it moves. But overall, it was a good set of numbers by Dixon Tech.
All right, Surabhi, thanks very much for that. Mahindra CIE should be in focus. There is likely to be, a sale of shares by the parent Mahindra and Mahindra. Abhishek has got details. Abhishek.
Well, Prashant, sources tell CNBC-TV18 that M&M is looking to sell a stake in Mahindra CIE. So the size of the deal is about 521 crores. The equity is about 3.2% of the equity. So it looks like a cleanup trade being done over here. The price band is 430 to 452 per share. So as I said, it would be a cleanup stake because they hold a 3.2% stake or that amount of equity as well. Broker is Kotak Securities, and a price discount is about 5% to CMP. So we could see the stock decline in trade as and when the deal happens. Post the deal, the price may rise. Back to you.
Thank you very much for that. If you remember, even in the month of March, Mahindra and Mahindra had sold about 6% equity in Mahindra CIE, and at that time it was done at a price of 357. So the stock has run up since that as the overhang gets lifted, and now they're selling at a much higher price. Let's do a quick recap then of the top stocks. The stocks with positive news flow are Ashok Leyland, Amara Raja. We also have
NMDC. NMDC, Biocon, Sun Pharma, they are stocks that are reacting to positive news flow. Add to the list, Bikachi, Dixon, Mahindra CIE, all of them reacting to positive news flow. While on the flip side, JSW Energy and Metro Brands, numbers did look very, very good, so maybe they start off in the red.